2020 is a year that most of us want to forget. As investors, it fundamentally changed the way that we think of a strong and defensive business. Traditional blue chip businesses like banks or telco is no longer as defensive as we think. Most listed financial firms, from banks to insurance companies in Singapore, are facing a much tougher time during this period. All except one. Today, let's look into one truly pandemic-proof stock in Singapore. Hi guys, Stanley here. Singapore is a financial hub of Southeast Asia, and we have some of the largest banks in the region. But during this pandemic, we can see that not even size will shelter you from a tough business environment. In the first half of 2020, major banks like DBS Group Holdings saw a 29% drop in profit before tax. One of the largest insurance companies in Singapore, like Great Eastern Holdings, also experienced a 35% drop in profit for the first half of this year. Yet, there is a company, which is 77 times smaller than DBS Group Holdings, has seen its profit double during the first 6 months of 2020. This company is iFast Corporation. So what makes iFast so special? And why is it able to grow at a time when most large financial firms in Singapore are struggling? But first, if you're new to the channel, I do hope that you will hit that like button. That will greatly help us and encourage us to continue making more in-depth video for you. And if you're feeling generous, remember to subscribe to our channel as well, and we'll bring you more analysis about the stock market every single week. Anyway, back to iFast. iFast has been a company that was born during the first .com era in the year 2000. You can argue that it is one of the first fintech in Singapore before fintech became a term. The company started out as fundsupermart.com, a website where investors can get information and then later on buy and sell unit trusts through its platform. Today, it has grown into a multinational business, serving both retail and corporate clients. Its retail business comprised of its unit trust marketplace, fundsupermart.com, its brokerage and wealth management platform, FSN1, and its bond marketplace, bondsupermart.com. Together, this segment contributes about 32% in revenue back in 2019. And it has a B2B business as well, known as iFast, where it provides a wealth management platform for financial advisors. This segment produced 68% of revenue for the company in 2019. The company has a stable and profitable business in Singapore, Malaysia, and Hong Kong. Among these three markets, Singapore continues to be the main and most profitable business. It has also ventured into China in recent years with its B2B business. This segment though is still unprofitable as of today. What is interesting is that during the start of the pandemic this year, instead of seeing a slowdown in its business, iFast enjoyed one of the fastest growth ever. Its revenue shot up 23.1% in the first 6 months of the year. And due to its business model of selling and providing its services through the internet, its profitability is not affected at all. Its profit for the first 6 months of 2020 grew 101% compared to a year ago. This was due to a shift towards more digitalization of the wealth management industry here in Asia. Given that iFast is an online-focused financial firm, both the retail and corporate client has increased their assets in iFast during the year. Its asset under administration grew about 23% this year. As iFast charge a service fee for some of these assets, the faster these assets grows, the more money iFast will earn, and with no real additional cost to them. This type of business model has what we call operational leverage. Its operational cost is roughly fixed, and as its volume of business grows, the variable cost grows much slower, resulting in a much better margin for the company. On top of that, iFast with its partners is one of the 9 consortium bidding for a digital wholesale bank license in Singapore. If successful, this will provide yet another avenue of growth for the financial firm. All this points towards a huge growth potential for iFast for decades to come. However, iFast is not a company without risk. Many foreign financial firms are coming into the market to challenge iFast's online-only model. Both firms like Interactive Brokers from the US and Tiger Brokers from China has set up local branch to compete with iFast. On top of that, the attractiveness of unit trust might slowly be replaced with more cost-effective instruments like ETF, and that might be less profitable for iFast in the future. Today, unit trust related revenue is still the key revenue source for the company. And lastly, is China business has been unprofitable for many years. Given that China is an extremely competitive market, it is not a certainty that a small foreign firms like iFast could make it big in China. Yet, the recent results of iFast are telling us that traditional banks like DBS or OCBC might not be as recession-proof or pandemic-proof as we once thought, but rather a company like iFast, which over the past 20 years has valued innovation and is very focused on disrupting the traditional finance here in Singapore, might be more resilient than we thought. So, what's your view on iFast? Remember to comment down below to let us know. If you want to know more about how we analyze and find great stock like iFast, remember to check out our free investment course at valueinvestasia.com/free course. We will teach you the full process on how we search, analyze, and even value a stock. Anyway, that's it from me. My name is Stanley. Till we meet again, invest safely.